Welcome back to Midcap Radar. Well, as promised, we have with us Mr. K. Paul Thomas, the MD and CEO of ESAF Small Finance Bank. Good afternoon, sir. Thank you so much for joining us. Mr. Thomas, first up, the business sentiment for players like yourself appears to be quite subdued at this point of time, appears to be significant amount of pain as far as the MFI space is concerned. Now, when we look at your Q2 numbers, significant deterioration as far as asset quality is concerned in the last 6 years amongst all of the lenders that you actually compared it to. What is causing so much pain, and was it something that was not identified earlier?
Yeah, thank you, Vivek, for having me on this show. Yes, yeah, you are right. This is one significant asset quality issues we are facing in our journey of last 7 years. This is there are multiple reasons. We have been facing this stress in one of the few of our major geographies, specifically in the West Coast, where we work with fishermen, and we have been in Kerala and Tamil Nadu. So we have been facing since the COVID. We have been facing this stress, and specifically in Kerala market after the 2018 flood also, the rural stress we have been facing, but suddenly it is bloomed with various other reasons. One is that the over-indebtedness issue. So after in 22, so there are many new players came in, and people were having a lot of money available. So there are real over-indebtednesses started coming, and there are regulated entities and non-regulated entities operating in this space. So that is one major challenge which we have faced. And the other issues are very high attrition among the field staff of our business correspondent partners was also contributed, because this is a very high-touch business model. So when the staff leaves, the customer connect, we lose the customer connect. So that also impacted. The third point was third issue we have faced, that after the COVID, because microfinance operates more on mutual guarantee, the joint liability groups, and that's how microfinance has evolved in India. So after the COVID, the meetings got, the importance of meetings got affected, and technically there was no meeting. So that affected the mutual guarantee, mutual solidarity has been affected. So
Mr. Thomas, yes, we get that point. My colleague Abhishek, who tracks the space, will also be joining in for the interview. But now the idea is MFI sector doesn't see recovery. So how long will this pain continue for you particularly? Because you've spoken about how things have been bad since COVID. Will this continue, or you're taking steps to improve this?
Yeah, we have already taken multiple steps to improve, actually, from
okay, yes, there is a snap line.
Yeah, we can hear you now.
Mr. Thomas, there is some audio issue. We'll just try reconnecting with you as well. But this is the word coming in from ESAF so far, the issues that they've been facing. We'll do one thing. We'll slip into a short break. When we come back, we'll get back Mr. Thomas online and try and understand what are the steps taken by ESAF to improve the problems that they're facing on ground.
Welcome back. We have with us Mr. Paul Thomas of ESAF SFB. Now, Mr. Paul, you did highlight about attrition. That's true. 60% is the attrition at lower end of the field employees that we are seeing amongst many of the microfinance lenders. Talking specifically about repayments, you have overdues to Aviom. So Aviom has an overdue to you. You are one of their bankers. What is the current status? Because as of now, we have the news that they have pushed down their, repayment to their lenders.
Mr. Thomas, can you hear us?
I missed you last. Yes, we have you were asking about Avion. Yes, we have an exposure with Avion. Our leadership team is in constant touch with the management of Avion, and also we have taken steps to connect with the board and the leadership, and they promised that they are bringing additional equity, and they will be able to service us. So that's what the latest update on this.
So has it been pushed on for some time right now?
Pardon?
Has the loan repayment timeline been pushed on for a few quarters?
No, at the moment we have not taken any. We are also interacting with the other lenders. I think the company is calling a lenders meeting early the first week of December. So maybe collectively the lenders together will take a call on that.
So what is the repayment from your end to your lenders? Because some of your lenders are telling me that there are some hiccups in the repayments. They are trying to call you. They are unable to connect with you with respect to what is the repayment status. Any outlook due to the stress in the microfinance sector that we are seeing? Are you also facing difficulties with respect to repayment to your lenders?
No, we don't have any issue. We have a very sufficient liquidity position. Our LCR is 130%, so we don't have any issues. Our asset quality issues is only on the microfinance portfolio, which now we have already taken this, steps to diversify our assets to secured book. Our secured disbursement within last year-on-year basis, it has grown to 92% has grown, and our gold loan book is growing at 59%. Our agri book is growing at 20%. MSME and mortgage book is also growing. So we brought down our microfinance from 72% to 62%, and we are also planning to bring down by financial year 26. It will be brought down to 40%. Our original plan was to keep it at 60% of by 27. So, but we have strategically taken a decision to increase our secured book, and also our geographical concentration on South. Also, we have taken steps to bring down our Kerala concentration. And we were having a concentration on our BC. 100% of our microfinance was operated through BC business correspondence. So we have taken over a major BC operations in July, so that we were able to bring down our BC. Now today, 50% of the microfinance book is managed by bank directly. So we are able to manage the attrition also that side.
So, sir, what is the second half outlook looking like in terms of your loan growth, the net interest margins, and also in terms of slippages and credit cost? Can you give us some numbers there?
Credit cost will continue to be the same level for the first half.
And the other numbers, net interest margins, and the outlook on the other numbers as well?
Net interest margin at September, it is 8.6. So it will be flat for the next 2 quarters.
Okay.
Thank you so much, Mr. Thomas, for joining us, and we wish you all the best for a much better and improved H2. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.